How you doing? So I recently came across an investor poll done by Morgan Stanley that found that 77% of millionaires own investment real estate. And if you look at the Forbes 400 list, a huge amount of them made their billions through real estate investment, and the majority others who didn't preserve their wealth through real estate investment. Now, real estate has always been characterized by Wall Street as this alternative asset class. Now, why is that? Well, real estate has not been a product that's been very easy to package and sell and split up and sell to investors like stocks or bonds have. Now, I would argue that because of our familiarity with real estate, that it's not the alternative asset class. Think about it. Through homeownership, your experience in real estate. Through being a tenant or renting a place, you've got experience in real estate. Through having a business and renting a commercial office space, you have experience in real estate. Now compare that to the stock market. How many people really understand the inner mechanisms of the stock market? So if you think about it, real estate might not be this alternative asset class. And it is the third largest asset class in the United States, behind stocks and behind bonds. So as we think about today's exercise, there really are powerful components to real estate investment. Now, there are downsides to it, as there are any investments, but there are many long-term benefits to this asset class when you think about it and how it can be incorporated into your investment plan. So today, we're going to talk about the major ways that real estate can help you build and accelerate your wealth. So let's jump into that first one. Now, the first one is that real estate has the ability to generate you cash flow. Now, what is cash flow? Well, cash flow in real estate is the income that is left over after paying all of the expenses and paying off the mortgage. Cash flow puts money in your pocket each and every month, and it becomes an integral part of many of my clients' financial plans. It pays for their living expenses. It allows them to work less because they have people paying their incomes through rent. So when we think about this on the granular level, stocks have a dividend rate of less than 2%, and the global bond market, fixed income, has a yield of approximately 2.3%. Well, commercial real estate on average yields about 5%. So you can see that real estate as an asset class has the ability to generate you more cash flow on a monthly basis that will allow you to pay your bills month in and month out without having to rely on the principal of your investment. Now let's talk about benefit number 2, is the principal paydown. Now this is considered to be one of the safest aspects to building wealth. Each and every month, your tenants, the people who rent your properties, are paying down the mortgage for you. And at the end of the year, whether or not your rent grows or whether or not the market appreciates in real estate, your equity is growing because your tenants are paying down your mortgage. Now, yes, you're going to have to use leverage and have a mortgage in order to do that, but if you finance your properties and investments conservatively, it's not going to make a huge difference, and it will allow you to build your wealth faster over time. Very important to be aware of. Now, number 3 is appreciation. Now, historically, single-family homes have appreciated far greater than the rate of inflation. And commercial real estate as well has grown faster than the general level of inflation. But when we think about commercial investment in real estate, it's not tied to the same factors as single-family homes. If you're going to buy a single-family home as an investment property, the value of that property is not typically going to be based on the rental income. It's going to be based on what your neighbor's house sold for. It's going to be based on the comps. It's going to be based on the MLS. But if you own commercial real estate, your ability to grow the net operating income of the property is going to allow you to force appreciation, because investors who own those properties look at the income. They're not so much as concerned as the comps as they are the cash flow. So appreciation in real estate is very powerful, and it can allow you to continue to grow your wealth over the long term, both over and above inflation, which is a huge factor that can erode wealth. And real estate has the ability, through its long-term appreciation, to help you accelerate and build your wealth. Now, number 4 on our list of things that allow you to grow your wealth is leverage. Now, there's 2 parts to the leverage. There's financial leverage, which means that you can borrow money to purchase an asset than a greater asset than you could with your own cash. This allows you to increase your potential return, but there's also the potential risk that you're now using borrowed money to do so. But if you do so conservatively, you use low leverage, you have long-term financing, you will be able to help you build wealth by locking in an interest rate and a payment, while we know that the appreciation potential of properties grows over the long term, and rent inflation also happens over the long term. So your income grows, meanwhile your expense, your mortgage cost stays the same. That's very valuable. Now, another area of leverage that we need to talk about is if you own real estate and you treat it like a business, there are systems in business that allow you to leverage other people's times, leverage multiple properties as opposed to one unit at a time, which allows you to get scale faster and quicker. So you can leverage things, and in this way, it doesn't necessarily increase risk. It actually reduces risk by using leverage in a more efficient manner. So that's very, very important. Now, number 5 is tax efficiency. We spent a very long time last week talking about 12 major tax benefits of real estate investing. Now, this is one of the reasons why you see all those people on the Forbes 400 list and why those millionaires are investing in real estate is due to the tax efficiency. Now, there are many factors of tax, but I'm going to touch on a few here. One is a tax shield from depreciation. It allows you to generate cash flow greater than what you're taxed at. So it provides you with less taxable income on the cash flow that your property generates. In addition, real estate gains are taxed at long-term capital gains rates. This is less than ordinary income rates, which is very significant for high-income investors. Now, there's other components that allow you to defer the gains and recognize long-term tax-deferred appreciation. If you decide to sell your property, you can exchange it in a 1031 exchange, which allows you to continue to defer your gain indefinitely into the future, which is very, very powerful. It allows you to keep buying bigger and bigger properties without having to pay tax on the previous gains of prior properties. And another thing that smart investors do in the tax world is they tax-free refinance. They refinance their properties, pull equity out, and use that equity to purchase additional properties. So it's not that is without cost. There are costs, and then it impacts the existing property's operating income, but allows you to improve the rate and compounding of your money. It's a very powerful factor when done smartly. Now, number 6 that I want to talk about is psychological diversification. So many of the market's catastrophic events to people financially wasn't because the market went down itself. It's because investors panicked and they sold, especially in the public markets. That's why people always think, it's very polarizing to think about the stock market. Some people love it, other people hate it. And a lot of the reason is the psychological impact. People have a hard time seeing the value of their accounts go down and down and down during a bear market. And they get to this point where they panic and sell, and what happens is it causes them to lock in losses and they never recover. And that's why the stock market, despite being at all-time highs right now, people's account values are not, because they don't know how to interact with it properly and it doesn't fit their psychological makeup. And the public real estate investment market, like REITs, really tracks the stock market. It's highly correlated, so the ebbs and flows of the public real estate market are going to do what the stock market does, which doesn't really benefit an investor that much. But private real estate offers this psychological diversification. One, it's illiquid, so you can't panic and sell and go log on to E-Trade and sell all of your real estate in one day like you can your stock market, which causes so much financial hurt for people. Now, that is very, very, very important, and especially if you're generating cash flow. Do you really care what your underlying real estate value is doing on a day-to-day basis if it's putting money in your pocket each and every month? That's very, very valuable. So you need to understand that this provides psychological diversification and it allows you to stick to your investment plan and build wealth over time. So there you have it. Those are 6 critical things that allow you to accelerate your wealth building. We're talking about cash flow, we're talking about principal paydown, we're talking about tax advantages, we're talking about leverage, we're talking about long-term appreciation, and we're also talking about the psychological diversification of real estate. So I know that real estate isn't for everyone from an investment standpoint, but there are ways to invest in it, whether you're the hands-on, active do-it-yourselfer, or if you want to outsource it to those pros that know what they're doing in this universe. So think about ways that you might be able to harness real estate to allow you to build wealth and accelerate your wealth building plans. And so when you think about real estate investing, the reason why we're doing these video series, it's not just about location. Real estate investing is also about education. So I appreciate you listening, and I look forward to building more wealth with you in the videos ahead. Take care.